Good evening, everyone. This is Henry Gamble with simplertrading.com, and in tonight's free video, I wanted to bring a couple of symbols to you. I know it gets a little bit tougher to continue to look for the buy side of the markets when you have such big up days and feeling like things are so extended. Well, at any time we could have a more significant pullback, but I try to approach the markets just thinking more about my risk and the names that will continue to outperform. I preface these setups with that explanation because if you look at something like Shopify and you say, how are you going to bring an idea of trying to buy it right against the old highs? Well, let me begin by saying I acknowledge that this is an area we could pull back from, and I know that this is a fairly large, volatile product, so let's just say that I'd love to buy it at 1,000, but when you think about it over the course of the next 2 to 3 months, and even more so, I think, over the next 6 months, well, these securities that have outperformed should continue to outperform. I also like the idea of trying to time my entries with the squeeze signal. So you can see the squeeze back in here. When the signal transitions, you get a pretty decent directional move. Right here, a little bit shorter duration in the compression phase. Right here's where we're compressing, but then does result in an excellent directional move. And now you have another of them. So just keep these in the back of your mind for potential to continue to outperform over the next 6 months. And then also think about that with something like MCD. You know, if you're looking for the Dow to continue to head higher, this is going to be one of the components that need to help lead the way, and it has a perfect breakout pattern for it. When you look at the monthly squeeze, it's similar thinking, where this phase of compression here resulted in nicely higher prices. And also remember that when you go through selling like what we had at the beginning of the year, yes, that is traumatic, and it can make for some very kind of exaggerated moves, but these exaggerated moves to the lows, you know, this big wick that flushes you lower right here, is going to make for a more significant extension. If you only move with swings like this that are very small, well, the pattern can kind of get a little bit boring and maybe a little bit slow. But when you have these huge volatile flushes where it flushes everybody out, you know, that helps it kind of reset to a certain degree and then slingshot into much more meaningful targets. So I think you have reason to look for MCD up into 245 and then 262. And then if you really have the patience to see this through, eventually 282. The fact that they have raised their dividend doesn't hurt anything. And then we can look at trying taking advantage of that off of some options plays. So I hope you guys find these helpful. I think they'll be good charts to carry forward, and we will revisit some of this in the future free videos.